Hello, everybody. Welcome back to 21st Century Renaissance, and welcome back to another open interest newsletter breakdown on GameStop from what looks like a prison cell, but what I promise is not. I am on the road, and I'm a little bit pressed for time today in terms of traveling, some unexpected delays. So I hope you'll forgive me for the difference in quality of setup today. So yeah, I mean, so we'll just hop right into this and talk about really what's going on here with GameStop, what we can expect over the next couple of weeks. We had a pretty predictable day as far as that recovery went. We definitely got kind of the shallower of the recovery scenarios, but our options levels basically played out as we anticipated that they would, which is a good sign, right? That even on down days to see options levels play out the way that we would expect them to. So definitely good signs there. Some potential bearishness, right? I'm not gonna pull any punches here. There is some potential downside that's kind of still, around the corner. Could happen. It doesn't necessarily have to. A lot of that is going to depend, and this is what frames our title for today. A lot of that's going to depend on really what the broader market is going to do. So we'll hop into today's breakdown. It is a little bit, maybe a little bit briefer, a little bit more concise, let's say, to the point with respect to some of the points I'd like to make, but hopefully it will get the point across here. So yes, of course, today's meme, Muad'Dib, the one who points the way, right? And you'll notice this, I've turned a lot of my attention over to thinking about our current context a lot more in the last few weeks. And a lot of that has to do with the fact that when we get to these low liquidity, well, I should say it's heightened short liquidity, but low volume conditions in GameStop, like a lot of the price action is really being controlled by what is going on with these broader market indices, what's going on with these ETFs that hold GameStop, how are funds rebalancing these the portfolios that contain GameStop, how does a little bit of shorting here, a little bit of shorting there end up causing fluctuations in the price, right? Because we were also seeing very limited activity in the options landscape as well. So for that reason, right, I have attempted to take a closer look at trying to understand what is going on in the broader market by using SPY as a benchmark, right? Using SPY, using SPX, trying to understand how options levels can predict or forecast or let us know about what might be happening in terms of these broader market indices. And that's really what we've seen over the past couple weeks. Is we've seen really kind of the same paradigm play out twice, right? So whoops, really big day on Monday. There's some kind of crash. It gets blamed on a news event, whether that's DeepSeek or the tariffs. We go right down to that put wall, around that composite put wall around the 590, 589 level before anybody is awake. And then we start to recover into the lower 590s, then a big recovery as soon as the market opens, because boom, now traders can go ahead and close puts en masse, right? Which they do. And then we see basically a run all the way back up to the volatility trigger. So in this case, around the 600 level. We saw that last Monday. We saw that happen yesterday. That's exactly what happened. And we can take a look here on our chart, right? We started a little gung-ho, had a little fake out, like we were going to go down and retest, the put wall here, but it stood around 590. And then once that proved itself to have been an intraday supportive level, wow, then we got a rip to the upside, basically almost up to 600 on this initial pop here, with kind of a slower, little bit of a volatile grind back up in there. And we can still see the importance. I still have this green line, right? Our volatility trigger. Red line is our put wall. We can still see how these are key metrics and sort of where they tell us and what they can tell us about what that's going to mean for our broader market price action, right? So heading into today, if we can stay above that green line, right? If SPY can keep itself above that line, we're going to be in call gamma positive territory. That means that trader bought calls are going to be mostly governing market maker hedging, which typically when we see those conditions in place, that's going to result in a slow upward grind toward whatever the call wall happens to be. So for SPY, SPX, it's around 6,100, 610. Strike that, reverse it. 610, 6100 here. So, right, we're not quite there. We're not quite looking at that pre-market now. So we do still have some risk of downside. We do still have, these risk-on conditions, this potential to kind of just run down. Although an intraday rundown would be a bit more grindy than this kind of, gap down that we've seen take place over the past couple weekends. That's still in play. I'd say it's a good sign that we're hanging out toward the top of this kind of 590 range. 595 is a bit of a volatility spiking level. We don't have a lot of built up put kicks in between then, but then 590, 589 is that really big, very high volatility position. If we cross that threshold and then don't reverse and get that volatility realized, if kind of puts keep flowing in for some reason, if we have people going, oh no, tariffs, it's the end of the world, push it down, push it down, push it down, it'll just keep running down, and then kind of freeze after realizing volatility at some of these key, basically these kind of $5 intervals, if we're talking over on SPY. If, however, we move above that volatility trigger line, over that gamma flip line at around 600, and we're in the 601, 602 range again, and we can stay trading in that range throughout the day without a willingness to surrender and head back into the 590s, then we're definitely looking at less volatile conditions. We are looking at, better conditions for an upward move, and that is going to translate, besides the S&P 500 sort of target of the call wall, that 610 call wall over on SPY, it's going to translate to something more consolidatory in GameStop, which might stave off a downward test of, as I'll point out shortly in our technicals, right? If we go down and take a look at our technicals here, stave off a test, let's say, of this lower level here, and we can see, right, based on yesterday's price action, I should say, based on Sunday night's price action, we moved down here. We established, let's say there was a forced assertion of this bearish regression channel when it had shown signs for about 2 weeks that it was basically moving into a consolidatory pattern, right? Even last week, even on this DeepSeek dip, we didn't really score that lower low. So definitely instilling some confidence as far as consolidation there. Not how things went, obviously, on Sunday night. We had a 2440 test, magically. Looks like that may have been on the heels of some pretty targeted shorting that was not logged until, right? So whenever you see volume pop up, Ultimator pointed this out to us the other day. Whenever you see volume show up or you see price action in the blue ocean overnight market, that the actual volume for that is not going to actually show up on the tape with your broker until very close to open. So something like 8 a.m. Eastern time, potentially later. It did look like overnight we had a significant number of shares being juggled around. It actually got down to about 1.3 million very early in the morning. It's got back up to 2 million and back up to 1.9 million. So the magical synthetic liquidity finds its way back. That's definitely still in play. Important to keep that in mind. But what did we get during the day? We got a sympathetic recovery with SPY, and it took us to the 2650 level, which I had pointed out yesterday that a trader, not for this week, but for next week's expiry, had gone ahead and opened up several thousand more short puts at that 2650 level. In the event that we opened below that level, which we did, it would serve as an intraday resistance, which it did. If recovery was not particularly strong, it was not especially strong. We got to about 5.7 million volume on the day, which did cause a little bit of an uptick in IV. Hard to say whether that was because of the increased volume necessarily, or whether that was a result of the gamma wipe on Friday and kind of moving into Monday's trading. Sometimes you'll see a little IV uptick just as a result of Friday going into Monday. Maybe a combination of those two factors. So yeah, so that's what we got. SPY cooled off a little bit. GameStop cooled off a little bit as well. We went back to about the 26 level and then just kind of calmed down and closed slightly below that. And then it looks like just kind of traded on top of the 200-minute moving average for basically all of the after hours period into the about the tail end of the overnight exto period. But in any case, okay, what does that mean for today? What are we looking at? Well, okay, if SPY stays consolidating, if it stays looking good, maybe we just hang out here, as we can see, as we did sort of pre-market yesterday, and where we began and ended the day yesterday, which is basically right on top of the 100-day moving average. Great to see some consolidation on that. I mean, certainly there's more opportunity to hedge against downside moves in the options market if you have more time. Then it becomes a little less risky to go ahead and sell calls, especially. Otherwise, if what we've seen in our options data is some traders have gone ahead based on the speed of this move that we saw overnight and into yesterday's trading, to start putting money additionally into downside hedges in the form of long puts, out of the money puts, or at the money puts, I should say. However, there's also been a fair number of sold puts as well at $26 and $26.50. Again, if we have consolidatory conditions in the broader market, we're probably looking at a kind of stable grind around 26, 26.50, since those two strikes are going to be primarily governed by the short put positions there, which means market makers are going to have to hedge long puts on their books by buying shares in order to remain delta neutral with respect to those positions throughout the day. So, we'd kind of be looking at a low and slow kind of gamma pin in that range with some support at the 100-day moving average, maybe another kind of mini consolidation for a week or something, so long, again, as the market remains stable and trading upward. If we don't see that, then really, I mean, what's kind of leaping forward on our technicals, and what I think whoever shorted the stock very late on Sunday night wanted to achieve, was certainly this intersection of our bearish regression channel that we were basically in the process of kind of rejecting through these 2 weeks of consolidatory price action, into this intersection of it with the 200-day moving average, which is right down there. It's currently at 24.16. A few days, I think it should have enough time to get up close to that 24.40 level, which isn't currently recorded on our daily charts. But of course, if you go to anything smaller than that, 4-hour interval and below, you'll of course see that value there in the overnight exto period, which doesn't look awesome necessarily on the charts, but is important to take note of, insofar as, yeah, there's a good chance if we get market instability that whoever is doing what they're doing with GameStop might try to go ahead and log that low for real, right, with that intercept point. If this does occur, it will send a strong RSI oversold signal, which may bring in some buyers. I would say really here, right, because if we go and look at our options, you guys can take a look at this over on the X page there. We just don't have stuff below us here. We don't have stuff below 25. There just isn't very much open interest. That can suggest two things. It can suggest, one, well, there really isn't much support beneath us. Once we kind of get through 25 is kind of the next major gamma exposure level. We've seen kind of a gamma bar chart look like this before. This was back during I want to say this was maybe during the September 20th gamma ramp. I want to say that Friday around the 19th. The price had been controlled, and we saw some redirected order flow, some tactical shorting, as I've pointed out before. That on the 18th and 19th, the price was suppressed and kept around 19.50, where basically we had very little, if any, meaningful OI below our position back on that date. So if you go back and look at the GEX data for September 19th of last year, September 20th, heading into September 20th, really, you'll see something that kind of looked like this, where we had this very large sort of total GEX position that basically was completely neutral, right? It had evened itself out, and we did find some support there, I think, or maybe what was this? Was it then, or did we slip below that? I think it was then, and then I think we had something similar to maybe in late October. I'll have to review that, and we can talk about that in this week's live stream. Worth bringing up there. But it's a very big position, a very big total gamma position, but kind of obscured based on just how balanced the total put and total call gex was at that strike, and it ended up serving as a very supportive floor. Now, is there a chance that 25 serves as that type of level for us now? There's a chance. It's a little difficult to discern from what we can just see from the raw GEX data. 25, of course, is a very strong psychological support level, right? Those big round 25, 30, 35, right? These tend to be strikes where a lot of OI on both sides of the chain does congregate, especially if it's below us, right? We'll see a lot of puts there. And it can function occasionally, right, as a put wall. Even when we see this kind of neutral situation, it can be something of a put wall that's supportive in the event that it is tested. So does it necessarily mean that we sell off and we go on all the way down to 24.17 or 24.40 or something like that? No, not necessarily. I mean, there is something to the $25 level that probably needs to be taken into consideration. It's a little hard for me to parse that at this point, but I will say, if we do have instability in the broader market, there really, between say 26 and 25, right, 25.50 is a trader long put position. So it means that as we go from 26 down to 25, dealers are going to be giving that a little bit of a momentum push downward as they sell shares to hedge their short put position. So that's not awesome, right? We don't like to hear that. We don't like to see that. That's what's hanging out kind of right below us right now, with 26 and 26.50 as trader short put positions where dealers are going to suppress volatility. 27, again, a lot of sold calls coming in at 27 and 28. That's going to, suppress volatility to a certain extent. But who knows, right? I mean, if these do end up becoming, if these do end up becoming sort of predominantly trader short calls, I mean, maybe the market maker and institution tries to, blow people out of these positions, understanding, again, sort of an inverse relationship. Okay, if 26 and 26.50, we've got all these short puts, 27, 28, we've got all these short calls. Maybe we just, send the price up, blow out all those short call traders, because deceptively, that's going to act as a gamma ramp to the upside, right? Dealers are going to build in buying momentum if those are really predominantly short calls, something like that. Hard to say. I definitely don't want to, I'm not doubling down on that type of scenario, right? Our max pain is back down now to about 26.50. Signals are neutral to bearish, and I would say slightly more bearish than they were over the past 2 weeks. Definitely more bearish than they were over the past 2 weeks, just from the fact that consolidatory channel was forcibly shoved through, at 8 p.m. on Sunday night, from 8 p.m. to 8:03 p.m. Eastern time Sunday night. So, that's kind of the name of the game. If we don't have momentum, right? Richard Newton's been doing a great job pointing to Roaring Kitty's momentum indicators. And they're about as bearish as you can look at this point. We just don't really have any bullish momentum at all at this point. Which is indicative of what this phase of these volatility cycles look like. Now, maybe we do have something coming up over the next couple of weeks in terms of, what did FTDs look like maybe in this shorting period around the middle of January? Were there FTDs that were open? Was what actually went into creating this synthetic liquidity back around the middle of January? And when are those going to be closed? Is that going to coincide with, say, institutions going ahead and filing and that'll be informative of it in its own right. So, okay, so that's a little bit of a kind of speed through that a bit, but I hope that's informative. That's sort of where my thinking is at this point, how I'm trying to orient myself and sort of measure my expectations for really what these next couple weeks will look like. Yeah, you know, hopefully we see something like, it would be great to see the market trade up and we just, you know, consolidate. But you know, there is that risk of downside both in the broader market, and as a result of that risk in the broader market, there is still some downside risk in GameStop in the short term. But you know, that's for the short term, not necessarily for the longer term. And you know, remains to be seen what institutions will be doing mid-February, or what they have done and what they're going to be filing at that point. You know, and what things are going to look like heading into March, especially mid-March, and into the annual earnings report. So a lot to look forward to there. So thanks everyone. As always, thank you again for your patience with the lower FI setup. Again, I hope you found this informative. Look forward to seeing you guys tomorrow. We'll get hopefully working on the setup again a bit then. So thanks very much everyone. We'll see you then. Take care.